Do you feel like the market bottom is in?
You know, we're cautiously optimistic at this point, watching a number of undercurrents. One still remains with the Fed and interest rates. And in particular, a lot of people are watching the Fed funds rate. We're looking at real interest rates, which just ticked up in November's reading. And so that's definitely a good sign that the real interest rates are beginning to turn positive. And that's critical for the bottom to be in place. We're not fully calling a bottom, but we are beginning to become more optimistic at this point.
So, Khaled, one of the reasons why we like featuring you and some of your peers on the CNBC Financial Advisor Top 100 list is because you have direct contact with many clients out there on the retail side of things, whether they're straight retail, high net worth, ultra high net worth. I wonder what the conversations are like right now. You mentioned interest rates. We mentioned the market bottom. Are there more questions, I guess, coming from your clients about the equity side of things, the genesis of that, or more on the fixed income and interest rate side of things right now?
I think in general, clients are just really questioning where the economy is going to go. So, you know, we're receiving a lot of questions. Are we going into recession? If so, is it going to be deep, or is it going to be more of a soft landing? We think that we're gonna be able to somewhat sidestep recession, given a couple of key factors. So some of the, you know, we're here in Hawaii, so we're surrounded by the Pacific Ocean, and so I like to use water analogies. So we're looking at three undercurrents. One I already mentioned with the Fed. The second is looking at actually the dollar and how it has recently fallen. And I think that lends to some possible opportunities in some of the multinationals and maybe even in commodities. Our clients are asking us, you know, not only where are their opportunities, but again, where is their risk? And we're typically preservation of capital minded. And so trying to sidestep a risk, and we still definitely see, as you've seen in the cryptocurrency markets, there's still tremendous amounts of risk in some pockets of the market. So sidestepping risk, looking at opportunities with really high quality companies that may have sold off, kind of with the baby in the bathwater, if you will, in the recent market downturn. And finally, a really significant question for our clients is, you know, when will we know the ultimate results of the midterm elections? And to us, policies matter. To our clients, policies matter. Leadership matters. Committee agendas in Washington matter, and they set the tone for regulatory action. And in this case, we're telling clients, you know, gridlock is somewhat beneficial for the markets, because we can anticipate some of the downward pressure that we saw from regulatory action and possible tax rate increases being alleviated somewhat with the possibility of gridlock. But then yet there's still volatility when we start talking about debt ceiling. So I guess bottom line for our clients and the concerns, what we're telling them is that there are opportunities, but we still need to be cautious and exercise, you know, real strong discipline.